Well, hello everyone. This is George Beyrouthi from Securities, a stockbroking firm on the Gold Coast in Queensland, Australia. And this is a regular program where I intend to bring you up to date with what is going on in the financial market and how to be successful in trading or investing in shares, options, commodities, or actually any financial instruments. And today, of course, is Monday, the 17th of December, 1 week before Christmas. Today on the chart for the ASX 200, our Australian main index, we see the following. Firstly, the market dropped from 6,373 in August to 5,602 on Friday's close. And that is 770 points or 12% correction. The thick orange line representing the 50-day moving average is well below the thick black line representing the 200-day moving average. We also see the pink line, that is the 100 moving average, has just crossed below the 200-day moving average. The stochastic down below here is showing a negative trend or negative momentum, and the dots over the candles, the green and red candles, that is above the candles, that represents also a very bearish signals for us technical analysts. And by the way, if you are ready to protect your portfolio, talk to us on what to do. Well, so where are we heading in the next few weeks? We are bearish, which means we expect further decline. The 50% line, that is actually the Fibonacci retracement, is shown here an important resistance or support. In this particular case here, it can represent a very strong support. So we expect that support to be around the 5,537. However, a further decline in the next few weeks or two by another 65 points or nearly 1%. That's what we expect. So our short-term forecast, we are heading down to around that level, 5,530. Perhaps have a dead cat bounce afterwards, and that is what we call the Christmas Santa Claus market, which we might push it upward, albeit with low volume, and then resume the bearish trend in January and beyond. The above spreadsheet that you can see on the screen is actually showing our mechanical system, which has come up with various recommendations for different type of investors and traders. Here we show the various indices on the Australian Stock Exchange. We've been warning you of the bearish sentiment that we have had on our market for several weeks. The only bullish sectors that we can see from our mechanical system, the GB8, is gold and materials and mining, which you can see here by the blue. All the other indices have been bearish for quite some time. And of course, if you took action sometime in mid-November, of course, you'd be making quite a decent profit. The above spreadsheet, we show you how our mechanical system has come up with various recommendations for different type of investors and traders. BHP, CIMIC, Newcrest Mines, Rio. So, and by the way, Transurban is also has been bullish for 3 weeks. And all the rest of the companies or the stocks, we actually focus on the large stocks that have got options on the exchange traded options market, that we can trade some various leverage products. And finally, the last chart here, we show how the volume on some shares ended up well above the average volume. For instance, the very top here on the bullish side, BHP had, that's the 50-day moving average, that's the volume moving average over 50 days, show 9 million transactions per day. And on Friday, we had 18 million shares. That is actually very positive when we know that the market price has gone up and the volume has almost doubled. On the other side, we can see here on the negative side, Orica, for instance, amongst other companies, that had 165% of the average volume. The average volume over 50 days has been 1.2 million, and on Friday we've had 2 million shares changing hands. That is actually also very bearish. At the bottom here we also show the mid cap if you are interested and if you are a trader rather than an investor. So it's time now that you may have some questions in your mind after you've seen our presentation. And we need to also tell you that we don't know your financial circumstances, so we have a disclaimer here, and we must mention to you that everything we've shown here is for general advice only. No personal advice has been given to you in this presentation. Now, to finish off, if you're trading or investing and you believe you need a hand to evaluate your portfolio and wish to learn how to pick signals on what to keep, what to sell, and what to hold on, we run an education program tailor-made to suit your needs. We don't treat all our students the same way. We assess their risk appetite or risk aversion, and we treat them either as investors or traders, and if traders, if they are conservative or aggressive. We also emphasize the risk-reward ratio importance. Here, by the way, are our details if you wish to contact us. Well, all I say now to you, have a great weekend trading, and hopefully you'll be making enough money to be happy with.